You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the FLOWMASTer Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time to roll out episode 2 of your bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are mainlining these days. Couple things at the top of the show. A, if you like what you hear, make sure you're listening to the full network. B, if you do like it, make sure you throw some stars, a like, a comment, whatever suits you, and whatever your platform lets you do our way. And C, if you want to investigate some more, only one place to go, theoptionsinsider.com/pro. The place to go to learn about all the great exclusive stuff coming down on the pro side. A great pro Q&A with some guy you may have heard of. I think folks call him Uncle Mike this week. I don't know. I don't really know who he is. He was recommended to me by a third party, so I can't really vouch for him. But nonetheless, that person, whoever he or she may be, was in the hot seat this week. Dove deep into all sorts of interesting topics there, and obviously a lot more time to go deep. And of course, you folks get to take the reins on the pro Q&As as well. So theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn, see who's joining us today. I think this might actually be that aforementioned person. I think they refer to themselves as Uncle Mike TOSAW from St. Charles Wealth Management. I'm not sure what that means. I don't know who he's the uncle of. So random person, welcome to the show, sir.
Always great to be here on the show.
And and also joining us not from the hinterlands, we're actually dialing the needle all the way down back to the southern volatility mecca, to the land of Austin, where he is still recovering from the week-long partay that is RMC, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the Option Block on the Thursday show, sir.
Yeah, good to be here. I'm excited. I don't get to usually do Thursdays with Mike and Henry. I'm excited for the opportunity.
There you go. Rock Lobster always elbowing you out of the way, but you got to take the hot seat today, which is fun. Speaking of the aforementioned hot seat, joining us in the SIBO hot seat this week, our old pal, the FLOWMASTER, a.k.a. Mr. Henry Schwartz, beaming in, I do believe, from SIBO East, but we shall find out now. Mr. FLOWMASTER, welcome back to the show. Where are you beaming in from this week?
I'm in New York City this week. Next week. I'll be in both Chicago and Toronto, Canada, getting around. But right now I'm still in New York. It's beautiful here. It's 73 degrees. Market's not doing so well, but it's a really nice day out, so I'm going to be cheerful.
A whirlwind tour for the FLOWMASTER. Are you going to be in Chicago on show day next week?
No, but the week after I am. That's the following Thursday. So we'll do that one from somewhere.
Another in-person FLOWMASTER episode coming up soon, listeners. You know what else is coming up soon? It's the trading block. So let's get to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading out there. And yeah, as the FLOWMASTER alluded to, not exactly an Uncle Mike type of day. Uncle Mike might want to go hide in the shrubbery for the rest of the episode here. Not looking good for him and the Bulls the last couple of sessions. We're in kind of that weird period, listeners. Is good news bad news again, well, at least when it comes to the broad economy? Of course, the economy was hot, super hot in the recent quarter. Of course, that means maybe the Fed not going to pump the brakes as everyone thought. Earnings kind of a weird mixed bag all over the place. Big tech, for example, that have been strapping the markets to their back this year. A mixed bag there as well. Microsoft shooting north, at least they were initially after their earnings, and Google having one of their worst days in a long time out there post-earnings as well. So very much a different story depending where you look. So again, a very much mixed bag. Not a mixed bag on the market front today, on the broad index front, because everything's looking red yet again today. After a big sell-off yesterday, some folks thought maybe it might mitigate today, and it seemed like they tried to bounce it today. They got it back up to not quite, looks like about 41 3/4 was the bounce back level, and then it kind of just crushing it back down again below 41.5 to around 41.40 as we're kicking off the show. So S&P off over one, about 1.1%, about 45 handles on the day right now to the dark side. The Dow, the laggard today, off about 0.2%, and the NASDAQ just taking the bit in its teeth, off not quite 2%, but pretty darn close, about 1 3/4%. All that a long way around to saying our vol friends getting juicier again. VIX, when we kicked off the show, 21 3/4, up almost 2 points, 1.9 points from where it was on the Monday show. VVIX 105, you might say, wow, it's a lot, but that's still down from where it was on the Monday show. It shows you how frothy vol was on the Monday show and still is coming into the Thursday show here. VXX 26 3/4, up 2 points from the Monday show. UVXY 19.3, up about 1, almost 1.5, about 1.4 points there. SVIX going back in the other direction, 23. Haven't seen that level in SVIX land for some time, down about 1.5 points. I know some folks were starting to write some puts to the downside of these levels. You might start getting those puts put to you out there. So intriguing stuff in SVIX land. Let us know if that's you, listeners, if you're starting to get SVIX put to you. And are you happy about it at these levels? Let us know. And then UVIX, the beast that has been unleashed upon us all, was at about a 43.30 when we kicked off the show. That puts it up exactly 5 points. Where it is right now, it's anyone's guess. It's all over the place. It's a wild beast we're all just trying to come to grips with out there. Well, let's go around the horn the opposite of the way we started. Let's go out to CBOE East first, to the CBOE hot seat. Mr. FLOWMASTER, a wild week out there in the market, sir. What was catching your eye out there this week?
So it's interesting, right? Because Mark and I were both at RMC together, listening to a lot of presentations. Some of it very, very quantitative, but you also pick up just basically kind of some of the views of these basically $1 billion and up asset managers. So The notes that I took from my colleagues were kind of like, well, there was a little bit more bearishness out there, especially basically everything was kind of framed around a higher rates paradigm and how you end up with some serious problems for companies with a lot of debt when you're looking at 6% interest rates. Especially if it looks like those rates are not going to be dropping back down anytime soon. But the other thing that was kind of interesting was, I think I mentioned the CBOE dispersion index last week or the week before, and I'm really kind of starting to like it because it does give you the ability to see what the market volatilities are saying about how stocks are going to behave, and not, basically whether you're going to see everything going down or everything going up, or whether you're really going to see basically dispersion, which is some stocks go up and some stocks go down. And I really like that. So, if we're here, right, with VIX around 21.5 now. So it's definitely a little bit elevated. And, I think everybody's really trying to figure out, okay, is this going to be like 2022 or something? Are we just going to keep sliding lower? Or are there pockets that are going to do great? And today is an interesting day because as much as all the broad averages are down pretty hard, there's actually, sectors that are doing well. I think financials are up almost 1% today, which is kind of wild if you think about it. So, and as you said, earnings are also like a really funky mixed bag, right? We saw Netflix explode higher. Meta's actually gotten whacked this morning. So I've definitely said this one 3 or 4 times. Shakeups are great because it kind of forces people to think, forces people to do some homework, discover some value, and things start to kind of, there's opportunity out there, and that's what I love to see.
We all love to see a little bit of opportunity out there. You certainly have some moments out there as long as you're nimble these days, listeners. Let's keep on rolling back to the Southern volatility mecca. Mr. Meatball, sir, what's catching your eye out there? And yet another blood red day on the screen, sir.
Yeah, it is. It's getting Vol's starting to froth up. VIX is now in backwardation. It's really a tech rout. The Nasdaq is down 2%, while S&P down 1%. The Russell 2000 was green most of the day until just now. And as Henry said, it is mixed. Materials are up 1%. Biotechs are up 1.2%. Utilities up 65 basis points. Retail is eking out a gain, and the financials are flat. But we are seeing, bank is up. Let's see. Goldman's down a touch. JP Morgan is – where's JPM on there? JP Morgan is down a nickel. So it's a mixed bag across the board. But like I said, there are some pockets where things are going up. But for the most part, it is a extremely red day.
Some might say a blood red day as we head into the Halloween season, listener. Spooky town. I was just getting my decorations out, getting ready to make the local kids vomit like I did last year. Not because of grossness. I'm not a gross guy. Just the appalling scares that were coming out. Mr. Uncle Mike, are you a big Halloween guy? Do you go hardcore out there in the hinterlands of St. Charles? And what's catching your eye out there? And yet another blood red day for the markets.
Well, hey, let's put it this way. Go to stcharleswealth.com if you're interested in a pumpkin spice portfolio review. So how about that?
I hate all things pumpkin, sir. So I'm out. Thank you, but no, I'm out.
You're out. Got it. Now, I think that right now we have we're down a little over 1% on the S&P, and I agree with Mark. This is definitely a tech rout. The first thing that comes up on my screen is Apple down over $5 on the day, and on days that Apple goes down by $5, it's difficult to have a rally. Combine that with Microsoft being down $12 on the day. It was like the euphoric buyers that came in right after earnings immediately became the paranoid sellers once it hit that pop.
They were just bidding it up like a day ago, and now here, crushing it. It's funny.
It is, and that's the market with which we're in right now. I think the market right now, I believe, is struggling to find direction because, like what's been said earlier, we have some sectors that are ahead, not by much, but some that are at least holding things up, so to speak. But when you have tech down like it is, it's difficult for the market to come through on it. to add to what the FLOWMASTER said, there's definitely opportunities out there. I know you can say that in any market at any time, any day, but if you are playing the short-term trading game, which a lot of our listeners, I think, tend to do, I think there can be a lot of opportunities. If you've been waiting for a pullback to get into Apple, as one example, well, now might be the opportunity to sell those 150 puts if you're interested in that. If you've been waiting for opportunities to actually, like I'm just looking at NVIDIA is all over the map all the time, so that's not a big deal for that, but that is down $16 on the day. But if you are looking to rotate a few things and reallocate a few things in your portfolio, today might not be a bad day to look for it because you'll have some opportunities to get into some things on dips. In the bond world, I know we talked about that a lot the other day on the Pro Q&A. I think I talked more about bonds on the Pro Q&A than I've talked about in many years.
You were Mr. Bond this week, that's for sure. The folks were throwing the fixed income questions at you hot and heavy.
Oh, no doubt about that. I mean, it looks like we're still around the same levels that we've been at for a little while in 10-year note world. And so I'm just I'd be curious to see if we had a sell-off in the 10-year note and we stayed above 5% for a little while, what would actually happen with that? Would that cause paranoia or would that cause a rash of buyers? I think 5% is a key number in the 10-year note world at this point, and not to steal thunder away from around the block, but that's definitely something that I'm watching very closely.
Let's see what else we're watching out here in the markets today. Listeners, let's fire up the old FlowMaster's magical mystery machine and see what it's got cooking for us here in the markets. Let's start out there, as we are wont to do, listeners, in the realm of the large indexes. Let's start in vol land because, hey, why not? That's where we like to start out there. And, the last couple of sessions, we've seen VIX this time of the day just knocking the cover off the ball, north of 800,000 contracts. That's why the ADV continues to be so frothy, 930,000 contracts right now. Today, a little bit of a laggard, actually, 417,000. And that may sound like a lot, and certainly it's no small amount of paper. And again, when the ADV was back a few months ago and we were back around 600K again, 417 was a lot. But just in light of the last couple of sessions and how aggressively we are turning to the dark side yet again today, not exactly seeing the paper keep pace. That could change on a dime. We all know VIX just needs a couple 100,000 lot spreads, and bam, we're off to the races. Right now, though, looking active. We're probably going to threaten that ADV. Will we exceed it? Not sure. SPY, though, not waiting for anybody. 5.8 million contracts on the tape in SPY land right now. The ADV, 9.5 million. So closing in on 10 million freaking contracts a day in SPY. Just crazy town paper we're seeing out here, listeners. Speaking of crazy town paper, the S, 1.9 million contracts. If I had seen this like a year and a half, maybe 2 years ago on the tape, I would have said, oh my God, what is going on? The sky is falling. The S is at nearly 2 million contracts by this portion just early on in the show. Something horrific is going on. Instead, now it's kind of like, oh, okay, that's where we are in S land now. 1.9 million contracts because the ADV is 3.5 million in the S. It's just bonkers. The small caps, as Mr. Meatball alluded to, small caps was trying to tread water, struggling to stay afloat, I should say. And looks like they're still mildly unched, just slightly green on the day, ever so slightly, but kind of vacillating around that unched level, which is more you could say for the rest of the markets out there right now. 480,000 on the tape in small cap land right now. The ADV, 1.62 million. And the Qs, about 2.9, almost 3 million contracts on the tape. The ADV, that used to be around 3 million, was the ADV. Now we're about 4.3 million for the Qs. So hitting already a day's worth of paper and looking like it's going to threaten the new ADV as well out there. If you want more breakdowns on all this kind of sector stuff and what's going on in the different indices, stay tuned for TWIFO coming up a little bit later. I got a feeling some of these sectors that have been lighting it up will be on our tape again, and we'll probably do a deep dive into all the fun going on in equities with our guests coming up there in a little bit. But now let's go out to the single name Palooza, listeners. Is it a Palooza today? Are we putting up respectable numbers? The answer is yes. This is not a day that the single names have been forgotten. It's not all macro all the time today because it cost you 263,000 contracts to break into the top 10 today. That's roughly 100,000 more than we've been seeing of late. So that's certainly something. I think earnings season has a little bit of something to do with that as well. That usually drives some single name paper. And the fact that all these big names are kind of all over the place, certainly driving some flow out there. Number 10, this one's been bit of a stalwart ever since earnings season kicked off. It's Bank of America. It's kind of been poking its head into the top 10 now multiple times, and it's there again today. 2603 is where the stock is right now. Actually up, as Meatball was alluding to, and Henry, financials managing to do all right, at least some of them today, including Bank of America, up about $0.50 right now. So the rest of the market is in the toilet, and Bank of America is up nearly 2% and good for 263,000 contracts. And the number 10 overall spot, listeners, number 9, it's SoFi, 284,000. SoFi to the dark side, though, so not all financials getting a lift today. Off about a little over 3, about 3.5% right now. Trading right around 684 today. So intriguing stuff out there for SoFi. Of course, go back, I should say, the last 6 months, it's still up over $1, about $1.20 or a little over 20% over the past 6 months. And indeed, year to date, it's up about 52% still, so about 2 1/3. So giving back some of what it's gotten this year, and it's certainly well off the highs it hit in July of $11.70. It's roughly half of that now, but still up strong on the year and certainly doing a lot better than it was in the contagion period, listeners. But again, good for number 9, 284,000. Number 8, listeners, Chip Zone come in right about where we expect it these days. It's AMD, number 8, 297,000 contracts. Off nearly $2 today, or about 2%, trading a little bit north of $94 right now. It's had about a little over, looks like over a $4 range here today. Wow. 312 to the dark side and 97.52 to the upside. Quite the range out there today, listeners. $4.40. And looks like they're threatening that lower end of that range again. Number 7, we were just talking about this one as well, talking about the divergence we were seeing out there on the earnings front. Microsoft shooting north, at least coming into today, not today, of course. And then Alphabet taking a dire turn to the dark side. Alphabet continuing that sell-off today, off nearly 4 handles, or about 3%, trading right around 121 3/4. The low today came about 121 1/4, so they have bounced off that. Will they maintain this? We shall see. The high was 124 and about 1/3. Of course, if you look year to date, they're still getting carried aloft on the winds of AI, listeners. They're still up about 32, almost 33 handles, or about 36% on the year. Even with this massive sell-off we've seen going from about nearly 140 on Tuesday to where they are right now, 121 and change. So obviously off their highs, but also still looking pretty frothy on the year. And good for number 7 today. Number 6, again, talking about just how they giveth and taketh away, listeners. They loved it back on Tuesday. They drove it all the way up to 346 in the after hours on Tuesday, how much they loved it. A lot of the cloud numbers coming out of Microsoft, people seemed really enamored by. And then flipped the script to today, and they're back down, not quite to 326, but pretty darn close, about almost a little bit shy of 328 right now, off about 13 handles today. So they giveth and they taketh away just in the last couple of sessions. It's amazing. Good for number 6, 447,000 contracts. They love Microsoft. They hate Microsoft. Interesting. Number 5, this is another interesting one. Uncle Mike just alluded to this one as well. This is the fruit company coming low on our list today. Still putting up 714,000, so it shows that the upper half of our list looking pretty frothy today. Apple, 165.82, off 5 1/4, or a little over 3%. Haven't seen Apple take a shellacking like that in quite some time. And as Uncle Mike alluded to, whither goes Apple, so goes the broad market. Kind of hard for S&P to be green when they're shellacking Apple 3%. So, yeah, they are not loving Apple today. It didn't seem like that long ago, the Meatball and I were joking about selling the par puts in Apple back when Apple's around 124 or so. Can we revisit those levels? Not sure we'll get there, but I don't know. You like Uncle Mike's 150 level? You like lower? What are your levels in Apple? Listen, I'm curious. Hit us up. Let us know. Might be a good question of the week going forward. We shall see. Number 4, listeners, we've got the Amazonians here. So keeping it in A, tech names, 859,000 contracts on the tape, 119 even. They just broke that, actually, 118.65 now, 2 3/4 to the dark side, off about 2 1/4% today, and good for, again, number 4, 859,000 contracts. Number 3, we were just talking about Meta. They liked them earlier this week as well. They were loving Meta. They drove them up to about 317. That was on Monday, on the heels of all the cuts they've made and everything else, really trying to trim down their expenses over there in Meta, and it seems like it's worked. Folks like them. They got them up to about 317, 318, and then today they're coming for it again, back down to 200 $485, off about 14, almost 15 handles just today alone, nearly 5%. And good for the number 3 spot, 882,000 contracts. So Meta, lighting it up out there today. Again, another one like Microsoft. They gave it earlier in the week, and now they're taking it away pretty aggressively later in the week. Number 2, it's kind of locked there now. It's NVIDIA, 984,000, off, actually just ticked off 17 handles now, trading right around $400, about 403 to be precise. Earlier today, got the high of 422 and about a half. So, my goodness, coming in 22 handles almost. Just a normal day for NVIDIA now, listeners. Wow, I don't even want to look at the year to date. Yeah, year to date, it is still up 257 handles, or 180% exactly. So yeah, the winds of AI still carrying it aloft. It was 143 at the beginning of the year, listeners. So my goodness, you're still looking good if you're an NVIDIA bull, even if you're off the highs of 502 that it hit back in August. And then number 1, nothing really seems to be able to dethrone the king these days. It is Tesla, listeners. 206, almost 207 right now, about 206.95 or so, off about $5.50 or 2.5%. I love the blame game that goes on in earnings season. Hertz blaming Tesla's price cuts for their bad earnings because they can't sell their used Teslas for as much anymore. I love the blame. The blame game is my favorite part of earnings season. Tesla today off $6.50 or little over 3%, trading 205. It looks like the tick down again, 205.83 or so. Good for 1.65 million. So got some paper on the tape out there on the old Tesla front. In terms of earnings, you know the deal by now. We are in it, listeners, hot and heavy. Big names popping off this week. We had Coke and Verizon and GM and Microsoft on Monday, as well as Alphabet. On Tuesday, and Visa. Wednesday, we had Boeing, our friends formerly across the street. I think they have moved or are in the process of. Meta and Beamer yesterday. Today, we have Southwest, we have Merck, we have Amazon, we have Ford. Have they settled that strike? Interesting stuff going on there. Chipotle, Skechers, and Capital One. Tomorrow, we've got Exxon, Chevron, and Phillips. If you want hot names popping off fast and furious, then you know where to go, listeners, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the darkest of dark sides here. Let's look really quickly at a couple of them that are popping off today. For your earnings enjoyment, listeners, we have fresh, hot off the presses from Matt and his team over there at ORATS. We do have updated earnings reports for you. We had Meta after the bell yesterday. They were at about $300 when we ran these numbers. They were pricing in 8.7%, and they still have underperformed, only down 6.1%. So underperforming their straddle. Let's see. Beamer yesterday after the bell, 137 even is where they were when they went into their announcement, and Meta was at about 300 as well. They were pricing in 3.9%. They delivered 3.9% exactly. So kind of interesting to see it exactly in line there. If you want to see all these performance numbers, we have a bunch of them for you, listeners. Check them out over there on the website. I'm just scrolling through to see any others that might catch my eye out there. We got Southwest was today before the bell. They were at 23.60 going into their announcement. They're pricing in 5.4%. As of right now, they had moved about not even 1%, about 0.7%. So looks like dramatic underperformance on the earnings vol front there. Will that remain the case throughout the day? I guess we have to wait and see. And again, we have dozens more you could look at that are coming up soon, listeners out here. Let's go to one really quick. Let's go to Amazon popping off after the bell today. At the time we ran this report, $121.40. They were pricing in $8.84. In the past, it moved $8.37. So a little bit extra juice. Remember, we were talking how earlier it seemed like the bias for most of these names coming into this cycle was more juice rather than less juice. Let's see if that is merited here on the season. Beamer today after the bell, 32.83 is where they were trading. They're pricing in $2.10. In the past, they moved $2.50, so a little bit less juice on the Beamer front, and many more for you folks to sink your teeth into. In terms of the season, we're hanging out right now with 148 names reporting, 123%. So looking robust. I guess more juice was the right way to go, at least for right now. Of course, that's going to change. We are still in the very early blush of the season, listeners. Our long-term average right now is hanging out right around 100%, which is kind of weird in and of itself. So be interesting to see how this cycle shakes up that average a bit. Right now, this cycle is looking frothy. Are the FLOWMASTER's trades looking frothy? I guess we'll have to turn to him to find out, listeners, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, listeners, welcome to the Odd Block, where we get weird, we get wild. On Thursdays, we unleash the FLOWMASTER and let him get weird and wild as well. See what his eye of the FLOWMASTER has found. And his first one looks like a banger, listeners. Let's go back to a name we haven't talked about in a little bit. This is INVZ Technologies, probably because the stock is trading at $1.36 right now, off another 7 cents or about 5%. This is a perfect name to lump into our how cheap is too cheap discussion. We were just having an options boot camp yesterday. And, of course, is our question, one of our flash polls for that show, which is expiring any minute right now. So if you're listening live, get over there to add options and make your voice heard right now. We'll reveal the results of that a little bit later. But $1.36 is where this stock is trading right now. Is that too cheap for options trading? I don't know. If the Viceroy was on with us, he would say a resounding yes. Are you down with that, listeners? I'm curious. A year ago, it was trading about $4.50, and it hit a high of $6.14. Looks like that was in February. Of course, February 2nd. And since then, with the exception of August 1st, a little pop to $4, it's been mostly straight down to where it is right now. Pretty much hit a low for the year in the last couple of sessions of $1.30. Mr. FLOWMASTER, looks like a crazy name. What did you spot out there in INVZ this week?
So, yeah, this was an interesting one because it was the biggest non-ETF trade that printed yesterday. And it actually, I couldn't make much sense of it until today. I had to talk to a broker on the Amex floor. But what we saw was a print of 100,000 of the April 2 calls for 23 cents. And it was a mid-market print on a quote of 15-cent bid at 30 cents. And it was the floor. So, those kinds of trades. I love the sweeps, right, where you see somebody, lift offers across 14 markets. Those are really very clear and accurate. A big, ginormous block, you just never know. Maybe this was discussed 6 minutes ago and the stocks moved a few cents. But I did get confirmation from the Amex broker that it was a customer buyer. It's 73 times the average daily call volume. The notional size of this is 10 million shares, right? And this is a stock that only trades about 2 million shares a day. So this is ginormous as far as trades go, and it is opening, so it's now by far the largest hunk of open interest. I don't know much about the company. It is based in Israel, where we all know there's serious conflict going on right now. But it is an out of the money call, and the buyer did lay out over $2 million for this position. So. I take a trade like that very seriously, and we've talked about this before. Sometimes when the stock's only a buck or so, the stock itself is an option. So I'd consider maybe just taking a small position in the stock. I don't think I would mess around with the options.
Yeah, I have a hard time shelling out 23 cents for that. But that is the subject of our question one of our questions of the week. We have two, as that's more of a flash poll we have going on right now, which is expiring any minute right now. But yeah, this is a poster child trade for that poll right now. Mr. Meatball, did you notice this massive print in INVZ, and what are your thoughts, sir?
Yeah, I did notice it, and I thought it was kind of odd. I was, I went and looked at the stock prints, and I didn't see anything in the stock prints that would say, they were hedging this off or anything like that. It looked like just a straight naked call buy. I don't. The chart on this thing is just a trail of sadness, so I'm not exactly sure what their angle here is, but it is definitely an eyebrow raiser, one to keep an eye on. And what I'd be looking for is a day where maybe the market is down and it starts to rally. You're going to want to play in that. They've got some earnings coming up, but this was an eyebrow raiser. I don't. Someone clearly has an axe to grind here.
Interesting. Thanks for doing the legwork there, Mr. FLOWMASTER, going to talk to the broker, because you're right, sometimes these big blocks that are negotiated, you have no idea what the hell they were actually up to. So look at that. The FLOWMASTER doing the legwork just for you folks out there. That's how much he likes you folks. As we keep on rolling, let's go out to another one. This is Acadia Pharmaceuticals, ticker symbol ACAD, ACAD. This is a biotech out of San Diego, trading $22.50 right now, off about 15 cents on the day. On the year, let's see, a year ago, it was trading $16, so a nice year for them, up about almost $6.50, or a little over 40%. They got higher. They got up to about 33, almost $34. That was in July, so they've given up, obviously, a good bit of their highs, but still looking pretty frothy on the year. After that spike to nearly $34 in July, they've come right back down to where they are right now. About $22.50. Mr. Flowmaster, sir, what did you spot out there in everyone's favorite San Diego biotech, Acadia Pharmaceuticals, sir?
Well, so this is you're going to love this one. Both of you will, because this is one of those trades you're looking at. You're like, did they really leave some sort of like an offer out there that nobody lifted that was way, way off in value? Because so overall, it looks like somebody bought the NOV 23-24 call spread, but they didn't do it in a spread. They did it in a couple of sweeps with a minute or two between them. So overall, it looks like about 5,000 of the NOV 23 calls were bought for $1. And as you said, the stock's around 22.5. But the weird part is on the short side of this, and I assume it's the same customer. They sold, the first thing they did was sell about 3,500 of the NOV 24 calls, and those sold down to 20 cents. And the valuation that I see on all of our systems, and I was using FT Options which is our really kind of turnkey trading platform where you get to fit the volatility curves and do all that fun stuff that we love to do. I wanted to make sure that, we didn't have some sort of weird inverted curve or something strange. And those calls were worth about 60 or 70 cents. And in fact, the first few traded at 90 cents when the stock was, 22.80. The stock sold off 30 cents, and then they started printing at 20 cents. So, and the theoretical value basically was never lower than about 70 cents. So I don't understand why anybody would do that if they weren't paying attention. If you go and look at the time and sales backwards in time history, you see these. It's one of these bizarre cases. You're like, okay, well, there's a print at 75 cents. That makes sense. And it's immediately followed by some bigger prints at 20 cents. So it's a strange one. In the end, if they are legging into the spread, they paid about 80 cents for $1 call spread, and this is an out of the money dollar call spread. So again, there's a lot of complicated math in options, but there's a few simple things, right? Like, if it's out of the money, then it's less than 50 delta. Therefore, the expected value is going to be less than 50% of the maximum value. You don't even need a model to figure that one out. So this is a weird one. I'm sorry that I missed it, because I think there was actually a chance to scoop up some of these calls.
You wanted to buy those calls. I can see you. I can see the gears turning.
Exactly. I'm like, well, wait, I'll take that side of it. But yeah, so it's not an odd block in terms of a trading opportunity. I think it's an odd block in terms of like, wow, don't ever do it this way.
Yeah, you might want to tap his broker on the shoulder, be like, hey, what are you doing? Selling me down from 70 down to 20. Maybe we put some judgment in there and we backstop it to 40 or 50 cents. I don't know. Yeah, crazy stuff. Mr. Meatball, did you notice this funky spread? Yeah, again, just all sorts of fun to be had, sir, in this ACAD vertical for 80 cents.
That customer got a really bad price. I don't know what they were doing. It's opening. Was it a fat finger? I don't know, but that is insulting to everybody that didn't get to buy those.
Didn't get to buy them. That's what got insulted. Not to the customers, to all of us out here who were busy
all
doing
of us
shows.
That didn't get to buy them. It's insulting.
Yes, we're all insulted on your behalf, listeners. Let's see if we can make up for that insult by paying off a trade here from the Monday show before the Flowmaster has to run. Let's go out to a trade we just talked about on Monday. This was Nano Dimension Limited. This is an ADR, listeners. They do 3D printing. At the time, we said, someone's really looking aggressive out there because they were loading up on a whole bunch of the 2.5 calls expiring this week, paying 30 cents. They were lifting the offer, so they were really coming for these. They bought about nearly 5,000 of them, then about 1,300, and another couple thousand. Looks like a total of around, I think, 8,000 and change traded on the day. Some as high as 35 cents. So they were really gobbling up themselves some Nano Dimension. The stock at the time was $271. So that's part of the reason why the calls were so expensive. They were roughly 20 cents in the money. And it looks like, okay, what did we get out there? Did we get the nice little pop? And it seems like we got some of it, listeners. The stock popped on Tuesday, so the day after this trade, all the way up to about almost 290, 288. And it seems like that was about as good as it got for pretty much good old NNDM, because ever since then, they crushed it. They actually crushed it back down to 268. They tried popping it again this morning up to 276, and it's gone right back down to about 269. So the stock is almost literally unched from where they put these calls on, and obviously the clock is ticking right now. Listen, I went and checked right before showtime. These have not traded yet, so they are all still open. They're all still sitting there. They're choking on these. Mr. Flowmaster, did you notice these from Monday? And it seems like they need to get going or get the heck out of Dodge, sir, at some point here.
Yeah, that one, I was in a personal fast market on Monday, so I missed that. But so then not all trades are good trades, and that's why we like to be keep our eyes on the market, because that's the other side of that can be opportunity.
That it can indeed. Unfortunately, that's the end of our opportunities with the Flowmaster today, Mister. I know you have to run. Maybe I'll see you in the same room in a couple of weeks. But before we go, with you, really quickly, give our listeners what you're paying attention to, what you're keeping an eye on in the markets until your next appearance next Thursday, and also B, if they want to learn more about all these tools we're talking about here, FT or Trade Alert or Live Vol, any of that good stuff, where should they go? What should they do?
So I'll be traveling, but actually one of the things I'm bringing with me to Toronto is kind of cool. I was able to write a query to identify revcons that are printing in the flex option space. So flex options, customizable expiration and strikes, and they're a little bit less transparent than the rest of the market. And so now we're actually, with interest rates up here, we're seeing much more revcon activity in general, because those are the trades that are related to borrow rates on stock and financing. But to see them starting to go up in flex is interesting, and I'm going to see a client that uses flex options, and I'm going to show that off, and we'll get that into the platform eventually.
You think the spreads would kill that on the flex, but apparently not.
It's negotiated. They were able to find two sides and get a really tight market. There's a lot of interesting things happening kind of in the flex space as that business grows. There's some days it's almost 1% of the rest of the market volume. So, on a 45 million contract day, you can see 45,000 contracts print and flex. I've actually been kind of diving deeper into FT options, which is a platform that we have at CBOE. I suggest people, and you have to be basically a professional or a semi-professional trader, because it is a very sophisticated and expensive platform. But if you go to CBOE.com/RMA, which is Risk and Market Analytics, down towards the bottom, there's a contact form. And, it's for anybody that's been a market maker in the past, or, likes to basically adjust volatility curves, see the theoreticals, run their risk, run all the scenarios. It's pretty slick. So that's kind of my pick of the week in terms of something I want to talk about. And then I will see you next time around.
All right, enjoy your travels, Mr. Flowmaster. We'll talk to you again soon. Mr. Meatball, you have something to add there?
Yeah, we didn't get to talk about Stone Cold.
We did not. So the Flowmaster is going to go. But tell you what, you and I can talk about it. That'll make you feel better. You and I can sink our teeth. Have fun, Mr. Flowmaster. We're going to talk.
Thanks a lot.
We're going to talk about our old friend, Mr. Stone. Yeah, Mr. Meatball, he was very excited after our show on Monday, listeners, where our old buddy, Mr. Stone Cold Steve Austin, was our 80s Wrestler of the Week, to have some paper in one of our favorite names we haven't talked about in a while. This is good old Stone Co., or as we call it around here, Stone Cold Limited, a ticker symbol STNE, trading about 973 right now, off about almost a dime on the day. On the year, it's had kind of a unched year, actually. It was about $9.90 a year ago. Got up to as high as about $14.65 on August 1st. The low came about $8 back in March. So they've had a bit of a range, even though right now they have settled back down to almost unched on the year, slightly down right now. And Mr. Meatball, I know you were pretty excited about a big print we saw earlier this week. What did you spot out there in Stone Cold, sir?
Yeah, this was an interesting one. I pointed this out to you. The trader sold 48,300 of the Jan 8 puts, sold 16,000 of the 10 puts, bought 16,400, bought 16,400 of the 11 calls, bought 49,300 of the 12 calls, sold 65,700 of the 15 calls. So they basically had some like layered puts that they sold and then bought 65,000 call spreads, some the 11-15 and some the 12-15. No stock done with it that I could find, Mark. So this was an interesting one. I wanted your take on it. And I was kind of hoping Henry had some insight.
Yeah, this reminds me of some of the charge point paper we've seen, right? Where they're just putting up something on every strike and going up for size here, listeners. But yeah, we haven't talked about Stone Cold in, you're right, quite some time. Looking at these prints here right now, I got the Jan 10-8 put spread. Looks like that's going up pretty much 1-to-1, about 16,500 times. Then against the Jan 11 calls, buying those. So what looks like a bit of a risk reversal there. And then also, they did more. They did extra of the Jan 8 puts, another 33,000 on top of that. And then to kick it all off, you got the Jan 12s, and then 50,000 of those, and then 65,000 listeners of the Jan 15s for a dime. They sold those for. So I guess that's your kicker. So it appears, it's a lot of moving parts, but it appears to be pretty heavily biased to the upside. And looks like they want it to explode. They're net long units, and then, of course, they get to the 15 strike. And looks like they net themselves out. So it looks like they're prepping for this thing to explode somewhere between 12 and 15 between now and January. And, man, they are putting a hell of a lot of contracts to work to make that happen. You're right. I don't see any stock legs either. This is a long way around to getting the stock to pop between 12 and 15, Mr. Meatball. They really must like their broker on this one.
Yeah, they do. It's a weird one. Did they like quietly sell stock somewhere else? And they're just kind of looking at get in, or is this, this is a Buffett holding? Are they kind of positioning themselves in the regulated market to try and get more of the stock? That would be one of the another question.
And the weirder part too is they spread out the long premium on the 12s and the 11s on a ratio.
Yeah,
that's weird.
They must have just had a dollar figure they wanted to use.
That's what I'm thinking. Yeah, because otherwise,
wanted to get as much exposure as they could.
There's no rational reason to do that.
Because it's not premium neutral. I don't think it's not premium neutral, right? Let me do some math here. I don't think it's premium neutral.
No, even if you add in 65,000 of the 10s, I don't think of the 15s for 10 cents. I don't think it all nets out to even. But yeah, this is
I don't think it does.
This is an Uncle Mike stupid taken to the next level and done on a ratio with a whole bunch of kickers.
Yeah.
So basically, listeners, they bought the 11 and 12s as a stupid on a ratio, kind of 4-by-1, mostly close to that, and then sold a whole bunch of other stuff against it. They sold the 8 puts 33,000 times, which is great for 33 cents. They sold the 10 puts 16,400 times for $1. Oh, they sold the 8 puts, looks like, again, 48,000 times. And then they sold on top of that as a kicker to the upside. The 5th. So they're dialing it into a very specific range in the stock, and they sold a whole bunch of premium against this. Wow, yeah. If I look at this makes me think of Charge Point. A whole lot of effort to do a very simple thing at the end of the day. But hey, we appreciate them. We salute them. That's what the Odd Block exists for, listeners. We'll keep an eye on this one, too, because this is coming up. January is closer than it seems, listeners, so we'll know pretty soon whether this one is looking pretty good. So I guess if this paper is to be believed, they're looking for Stone Cold to maybe the high of the year is 1483, so probably no coincidence that they're selling 65,000 of the 15s, Mr. Meatball. They probably look at this chart and they say, okay, we get anywhere back close to that range, I'm out, and I'm happy to be out. Wow, a lot of effort. And if it keeps going down in this direction, listeners, I guess they're happy picking up a whole heck of a lot more Stone Cold, because it seems like that's what they're about to do. And we're about to go on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. portion of the show where you folks take the reins, and our discussion with Henry over that massive trade in INVZ, the 100,000 lot for 20 odd cents when the stock was $1.43, leads in perfectly to one of our questions of the week this week. We have an actual official question of the week. We'll get to that in a second, but we also did a fun flash poll because our options bootcamp show yesterday was all about the topic of, how cheap is too cheap? When do you just not want to trade the options anymore? The stock becomes the option. So we put that out to you this week. Again, dovetailing nicely off this. A lot of people would think when the stock's $1.43, that is the option, but clearly this trader did not. So we asked you this week, when is a stock too cheap to bother trading the options? What is your cutoff level? Gave you 3 choices and the infamous other. We said, hey, there's no cutoff. You'll trade it whenever. You don't care. Or B, you go below $10. That's where you draw the line, this far and no farther. Or C, below $5 is where you start getting a little bit skittish. Or other. And we had a whole bunch of people chime in with some interesting others. Before we get their thoughts, let's go out to Mr. Uncle Mike. We'll start with you, sir. What is your cutoff, if you have one? And then B, what do you think our audience voted for?
I don't know if I would necessarily have one. Something that comes to mind if you're a futures option trader, like what about natural gas? Now, I know the contract size is a bajillion times bigger than a $5 stock would be, but in terms of like the percentage of it, isn't that the same argument depending on what kind of size that you're trading? So why not go low with it? So I typically don't trade stocks below $20 for the most part. So I'm probably not a good person to ask on that. But if I saw a stock that I liked at $5 or less, I would go ahead and buy the option if that's what I felt was the right thing to do. And I wouldn't have a cutoff per se. My cutoff is in relation to quality of stocks that low of price, not in relation to the options.
So your counterpoint is, what about all of nat gas, which is perennially under $3 for the most part, and yet it puts up 500,000 contracts a week sometimes. So interesting counterpoint. My counterpoint to your counterpoint, sir, is your buddy, the Viceroy, who wants nothing to do with any of this crap.
Well, I don't want anything to do with that crap either, because I don't even want the stock at that price. So I think it's too. I don't want to buy crap on crap. I'd rather, because the initial round of crap doesn't make me want to go to a derivative of the crap.
Ah, yes, crap on crap. We'll have some discussions of that maybe on Options Oddities a little bit later this week. Mr. Meatball, sir, what is your personal cutoff if you have one? And B, what do you think our audience is voting for?
On a stock, I mean, I'll trade just about anything if it's active. I'm a trader, not really an investor, but there are some stocks that can get really inexpensive that end up being decent buys. I mean, AMD was $4 at one point, and so you can find those gems, but you really have to have some. You really have to have a real outlook on it, right? If I'm going to buy a really, really cheap stock. So for the most part, I think $10 is probably a good cutoff, because that is a level where below $10, there's a lot of funds that can't even buy them.
That is where our audience is lining up. 34.6% saying below $10, 30.8% saying they have no cutoff, so they're in the Uncle Mike camp and yours of, hey, they'll trade whatever. Below $5, 26.9%, and other 7.7%, including in the other, we have Miguel Sanchez saying market cap and average daily volume, so I guess that's how he likes to look at it. He says, shout out to the Meatball and Russell. The wrestling hot takes are entertaining. Well, there you go. You got a shout out, Mr. Meatball. He likes you, and he likes the Once and Future Dr. Vicks. And he also enjoys our wrestling segments on Monday. So there we go. A little bit of love, at least for you and for the Once and Future Dr. Vicks. Let's keep going to our actual question of the week, which gets into kind of the subject du jour, which is, of course, zero DTE. We said we got more data under our belts right now about 0 day, so it's time to revisit this question. Quite simply, do zero DTE options increase intraday volatility? Heck yes, heck no, or you still need more data. Got a lot of people chiming in on this one as well. One of our pro members, Age Del Aquarius, saying, does gasoline cause a fire to spread? I like that one. He's not a fan. And then Machiavelli, who's written in, I think, to our boot camp show in the past, saying, doesn't it just provide more liquidity? More liquidity equals less vol. So again, you can see the diversity of opinions even just within our audience. Mr. Uncle Mike, we'll start with you again, sir. Are you on the heck yes or heck no camp, or do you need more data? And B, where do you think our audience is lining up?
I'm in the I need more data, I would say. And I'll say the audience, well, they probably are also in the I need more data camp. I think they'll say heck yes.
Interesting. Mr. Meatball, same question for you, sir. 0 DTE, increase, I should say, intraday volatility. Heck yes, heck no, or I still need more data. Where are you falling? Where does the audience fall?
As I said, on Monday, it decreases volatility until it doesn't. And at one point, it will dramatically increase volatility, but until then, it's decreasing.
And the audience disagreeing vehemently, 63% saying heck yes, 29.6% saying heck no, and I still need more data, 7.4%. As we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, time to go around the block, tell you what we're keeping an eye on until our next episode on Monday. Uncle Mike, we'll start with you, sir. What are you keeping an eye on until the Monday episode?
10-year note yields. I think that's something that's very important in the market right now. Also, I didn't think I'd be saying it this soon, but the 4,100 level for the SPX, seeing if we can hold that. We have a down day tomorrow. We might not be holding that, but at least for now, looking at the 4,100.
Mr. Meatball, same question for you, sir. What are you keeping an eye on until the Monday episode? We talk some more wrestling.
Yeah, I mean, we've got another big earnings from Amazon tonight. I want to see what the market does. We're getting kind of a little midday meander here. Are we going to close on the lows? Are we going to stay below the 200-day moving average? Are we going to make a run at kind of 4,100 and eventually 4,000? There's a lot on the table here. And I'm watching VIX.
You're watching VIX? I find that hard to believe, sir.
I know. Crazy talk, right?
I like that. Midday meander. I might have to borrow that. That's a good term because we are kind of meandering. Coming into the end of the show, listeners, S&P off a little bit less than 1%. The NASDAQ off about 1.6%. Dow off about 0.5%. So a little bit of a modest bout. Will this have teeth, or is this just a little bit of a respite before they begin the next leg down? I guess we'll find out. Unfortunately, we won't find out on this show because that's all the time we have. Let's go around the horn really quickly. Let's go out to the Uncle list of Mike's first. Mr. Uncle Mike, sir, if folks want more Uncle Mike goodness in their lives, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com, if you're looking for a financial advisor that's not afraid of the option product and would give tax advice should it be needed.
All right. And Mr. Meatball, sir, where should folks go if they want more meatball goodness in their lives?
Go to optionpit.com. I'm putting out the Trader's Edge every day and, all kinds of pretty awesome content. So come to optionpit.com and see what I'm thinking and trade along with me.
Trade along with him, indeed. Optionpit.com. We have to get on out of here. Back again in a little bit for TWIFO. So all you pro folks, hang out in the live. We'll be back again in a little bit with our guest, Mr. Scott Bauer, joining us again to talk about all sorts of fun, probably in the equity realm and where we go from there. Probably hard to escape energy these days. Ags have been lightening up a lot these days as well. What else will make it onto our list? Got to tune in to TWIFO to find out. That'll be coming up in a little bit for all you on-demand folks. That'll be available on the network later on today. Back again tomorrow, noon Central, to break down a mad week on the vol front. Have some fun guests joining us there as well. Will we have a Loggins joining us on the show? I guess you got to tune in tomorrow to find out. And then after that, exclusively for you pro folks, we're back again for Options Oddity. Should be a lot of fun to be had there as well. Maybe some tears. All sorts of fun. We'll find out. And then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cbo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.